Check, check, 1, 2, check, 1, 2. If you guys can hear me that are in the chat, can you let me know? Thanks. You can hear me. Okay, good. Great. Thanks. Yeah, so obviously we're going to get started at 5. So we've got, 12, 13 minutes. I'm waiting for Alex to come into the Zoom meeting. Hopefully he is on time. I really haven't heard from him all day. So, but he has retweeted my tweets, so I'm sure that he's aware of the time and everything. So we're just gonna hang out and wait. You guys chat amongst yourselves. As far as I see questions. Is Zardar going to be here? Is Ed going to be here? As far as I know, it's just going to be me and Alex. If Alex would like me to send the invite to anyone else, I will certainly do that. But I will let him decide that. Okay. All right. I'll be back to you guys shortly. Thanks. Wait, you guys chat amongst yourselves. Um, All right, we've got looks like 34, 20, 27 or so. I'm a little confused about how many people are actually in the chat right now. 38 maybe. I appreciate you guys being here. Please, yeah, hit the like button if you could. Basically so that it this goes out to everyone else and people know that we're here. We would love to have as many people as possible in this meeting today, in this chat. I'm looking forward to taking you guys' questions, but I'm also looking forward to letting Alex explain some things about this proposal that we've been wanting to know. So ask your questions. Let me apologize ahead of time if I don't get to absolutely everything. I see a lot of people that I'm really glad are in the chat. Ryan is my mod. Thanks for being here, Ryan. Mr. Crypto is here. Who else do we see? Vlad, Mr. G, Fat Man. Glad you're here, buddy. We haven't met yet. How you doing? um, I'm sure you're gonna have some questions for me, and I'm gonna look out for them. Let's see. Travis, Uncle Bam Bam. All right, thanks all you guys for being here. As soon as Alex jumps in and tests everything out, we will get started. All right, get back to you. I deserve a 90% burn tax. Is that the real fat man? Does anybody know? Is that the real fat man in my chat? 90%. All right, let's do it. You first. Someone said Alex revised his proposal today. Um, I'll ask him about it. I mean, it seems like he's always, tweaking it. Uh, I'm not sure if it's something, from the community that, made him change something, or if that's even true, but I will certainly ask him about it. Has anyone read the proposal yet? I've read it, Mr. G. In all honesty, I probably understand about, maybe 25% of it. Okay. And I also watched the interview that he did yesterday where he got into a little bit more of the technical aspect of it. What I want to do today, like I always do on my channel, is I really want to try and keep it more simplistic, and ask the questions and answer the questions that we want to know about. We want to know about. Somebody said there's no sound. Vlado, there's no. I can hear the sound perfectly. So maybe turn your volume up. Is anybody else having trouble hearing sound? Can everybody hear me? Okay, thanks, guys. Copanero, okay. So he published something on Medium today. That's awesome. Most of you who know me know that I work my butt off, and so I ran home from work today to get things set up and ready for this chat. So I unfortunately don't have the luxury of sitting home all day and just scouring the internet and watching what's going on. So a lot of times I don't even find out anything happened until 4 or 5 o'clock in the afternoon. Um, so all right, so yeah, that's awesome. Thank you for pointing that out to me. I guess we'll chat with him about what changes he might have made. I can hear you perfectly. Thanks, Ryan. Popping in to show some love. That's my boy Fire King. Are you at work right now, King? Mr. P, how you doing? Julie, thanks for being here. Joseph, Shooting Star, everyone that's in the chat right now, thank you so much for being here. We have like 71 people in here. Not sure how many likes. Um, Shows me like 21 likes. So make sure you hit the like button, guys, on the way in. Before this gets started. That way, YouTube pushes it out to more people. There's my boy Richard. Glad to see you. You're at work, Fire King. You guys, my mods, Ryan, Fire King, Richard, you guys are hanging out throughout the chat. I know that this proposal is very contentious with some people, and I know that a lot of people are probably going to want to come in and give their opinion on it. And opinions are very welcome. But I know I can rely on you guys. Anyone that's being rude or just pushing their opinion over and over, spamming and stuff like that, I know that I can count on you guys to kind of handle that. I want everyone in here to have an open mind, and let's listen to Alex and give him the respect that he deserves for taking of his time to come in and chat with us today. Listen, it's not everybody that's spending all their time trying to figure out ways to make LUNC work for all of us. And whether you agree or disagree with his proposal, he's put in that effort, as well as a few other people, and they deserve respect and appreciation for trying, okay? So that's what I want to see in this chat today is, be ladies and gentlemen, please. Absolutely, Richard. Everyone should have an open mind. That's true. So it looks like Alex is here. Alex, give me 1 second to put in my headset before we start echoing all over the place. I didn't even think about it. Give me 1 second. All right, my friend, I can hear you. Oh my goodness. Are you going to be all right? You're going to drop out on me or what? See, even you're making the mistake. All right, let me just check with everybody in the chat and make sure they can hear you. Can everybody hear Alex in the chat? There's like a couple second no sound on Alex. All right, let me see what I can hear you fine. No, they can't hear you. All right. So Matt helped me with this new setup and it may or may not work. So let me try something. Let me see. I might need to do this a different way. Give me a couple of seconds, guys. Yeah. Give me a second. So I'm gonna get rid of the headset. And bring your volume up here. All right, Alex, go ahead and chat for me.
Testing 1, 2, 3.
All right, how about now? Can you guys hear Alex now? Can Alex see the chat? Okay, yes. All right. I guess that's the way we got to do it. Make sure that you can. All right. Yep. Everybody's good. All right. Awesome. Alex, thank you very much for coming on. We've been trying to organize this for a little while, and everybody's got tough schedules. I know that you are crazy busy. And we appreciate your efforts and what you've been busy with because it's for us. So that's really cool. I watched you.
Pleasure to be here.
I watched your interview yesterday, and I liked it.
How was it?
Go ahead.
How was it? What did you think?
I liked it. Like always, you get a little technical for me, and I don't think you can help it. That's just your, that's where you live. That's your space, But I do appreciate you trying to, for lack of a better term, dumb it down. I really did like it. I thought you were really comfortable. I thought you were really trying to get your point across. And I thought it was a great interview. If anybody missed that interview yesterday, I'll try to link it. I'm not subscribed to that guy. What was his name and what's his channel?
The company is called Staking Rewards. The guy's name was Marion. Like I think it's like Walters. If you just go to if you just look up stakingrewards.com or like at Staking Rewards on Twitter, you'll find it pretty quick. Well, I can look it up really fast.
Yeah, yeah. I mean, if you want to, but if not, like I said, I can link it at the end. I'll put it in the description. But if you missed that interview, it was probably, I don't know, it was a little more than an hour long, huh? But what a great interview! It was really good. So I think at this point everybody has read this proposal or heard a lot about this proposal, maybe watched that interview, and all the technical stuff I think has really been explained. But somebody in the chat a little while ago was telling me that you released something on Medium today and you changed things a little bit.
No, I didn't change things. I basically said, okay, like I basically dropped this 20 pages of financial engineering mumbo jumbo on the community. It was just too technical. And I think the general reaction was, seems really smart and it seems like a lot of work was put into it, but like what the hell does it actually mean, kind of a thing.
Okay.
And I think it played really well with people like Ed, who really helps me a lot with it, or like Strathcole and kind of like the real blockchain nerds. But for like more ordinary people who like don't have the time to go to completely nerd out on this stuff, I think it was just too dense. And so I thought about it and I was like, okay, basically I think I made a mistake in that. So if we rewind to like 3 or 4 months ago when I was Ed and Zeradar and I were first kind of talking about what an AFT kind of like a new AFT solution would look like, we had a couple of basic design principles. One was it had to have a strong level of collateralization of like by external assets like BTC, right? And it had to do something for USTC holders because it was like the Terra Rebels wanted to represent the whole Terra Classic community, not just like their bags, like LUNC holders. They wanted to, if possible, do something for USTC holders as well. So I made this like very complicated kind of financial engineering solution trying to tackle two separate questions. One was, how do you design kind of like a successor to UST that will work, that will not blow everything up again, that's backed by BTC or maybe something else, whatever, who knows. But how do you design like a successor dual token structure, let's call it? That's question number one. And like, how could you launch that without minting new LUNC? Because that is possible. And then the second question is, how do we help USTC holders if possible? Because that would definitely require the minting of new LUNC. So it's like, so my paper kind of it like tried to tackle both of those questions at the same time and come up with the best solution for both of them. And I think the result was just too complicated for people and just not really clear. And so I said, okay, maybe it's a better idea if we just break this one gigantic proposal into two proposals. Proposal number one is, what's the design of the new AFT? Like, what level of BTC collateralization? Like, is it going to be 60%? Is it going to be 50? Is it going to be 45? Is it going to be 100? Is it going to be something completely different from BTC? All those questions, that's kind of big question number one. And then big question number two is kind of, what can we do for the USTC holders, especially because over the course of the last 3 months, I think the community changed a lot. Like I think in late May or early June, maybe let's say mid-June, there were significantly more USTC holders who were active. I think if you tried to look at like the political center of the community, there's probably a lot more even between those two camps. And then we got a huge growth in the number of LUNC holders over the last 3 months. And these people are very reasonably, they're coming in and their default view is like, well, why do we owe these USTC holders anything? Like that default happened on May 13th. So like, why are we talking about this? This is ridiculous. And that's not like, and that's a very fair, like that's a fair, there's a lot of like validity and understanding to that line of thinking. So I said, okay, maybe we'll just break this up. So the community can have like one discussion process around like the AFT and what that would look like, and then we'll have the discussion later about, do we want to do minting or something for USTC holders to bring them back into the fold as part of our community or not? Because that's the second part requires minting. The first part technically does not.
So you've divided this up into, A and B kind of. So we'll get A done now. A does not include the minting. Is B?
It can. There are advantages that come if you do a little bit, but it definitely doesn't require it. So, yeah.
Okay. Is B optional? Like, let's do A.
Yeah. I mean, B. It could be like, well, we just, as a community, we feel bad for USTC people, but logistically, and it's kind of going to be too challenging for us, and we'd love to have you guys back, but we can't like write a $50 million check to you guys or something to like bring you back in. Yeah. So that's
obviously minting is the elephant in the room. I mean, you're well aware of that.
Yes.
And so something that I got yesterday from that interview when I watched it was that the minting, in order to help the USTC holders, if that's what we wanted to do, minting is going to be essential, right?
I think so. I mean, I can't think of, maybe someone smarter than me could think of a way to do it that would not, but I can't. I mean, right now the USTC is sort of like a shit coin that's not backed by anything, right? It's like, it's just, there's 9.8 billion of those tokens floating around, and they have this price that's, I guess it's like the probability of dope bonds of Luna 2.0 backing it someday in the future, or maybe the probability that our protocol would back it, or like, I mean, it shouldn't be worth zero, but it's not backed by much. So, yeah.
All right. But you said, all right, so if we go with, I'm calling it plan A and plan B, but I mean, that might not be how you look at it, but just for the sake of the
step one, step two.
Step one, step two. Okay, that works. All right. Yeah. So in step one, you said that minting isn't necessary, but you could mint in step one. So other than to benefit USTC holders, what other benefit to the plan and to the community really would minting serve?
So, so minting in step one would not be for the benefit of USTC holders. It would be to, like, let's say we say, okay, so right now the Oracle rewards distributor smart contracts plus a couple of other contracts with some small ones have about 325 billion or so LUNC, and then like the community already owns it. And the community can do, and right now it's paid out over, I think, a 1.5 year period or so to the stakers and the validators, right? Mm-hmm. Now, those funds the community can do whatever it wants with that money. And the Oracle Rewards Distributor smart contract, it's just like it requires a dual token system in order to replenish itself. So so right now it's just being very slowly depleted, and it'll go to zero in like 1.5 years. So we have like a year and a half to get a dual token system up and running, or figure out some completely different system for like long-term compensation of stakers and validators, because we're right now, we're based under that system. We're on this like 1.5 year clock. So, so, but that fund, so that 325 billion or so LUNC is about $90 million US dollars worth of capital, and or let's just say 85 million, and that could back 140 to 150 million US dollars worth of AFT in issuance immediately. So that there's just zero minting required to make that happen. You're using existing resources to do it, and the stakers and the validators, they would take somewhat of an upfront hit, but they would also be like investing in their own long-term like income stream by doing it. So because they have to restore a dual token system somehow in order for this to be sustainable. So that's why like that that's why I was starting to refer to it as like the skinny version of my plan, is because it's just like, okay, this is like the simplest, no crazy, no weird financial engineering. You don't need 20 pages to lay this out. It's pretty simple. Yeah. So now if you wanted to accelerate adoption of the AFT by doing things like investing in a little curve pool on Ethereum mainnet, like start to like provide these gateways for people to like use it to like enter our ecosystem elsewhere.
Okay.
That requires a little bit of funds, and the community would still own that. It would have to like mint a little bit of new LUNC, not like less than 100 billion probably.
That's a little bit. Less than 100.
No, I mean the community. This is all optional, right? Like
right,
I'm just saying. But you all like you want an AFT, but you also want people to like be able to adopt it, and you want it to like be able to be used cross-chain and stuff, right? So the more of that infrastructure you put in place and fund, the faster it will grow, and that accelerates the burning. Anyway, those are all like potential, risk reward decisions that the community has to make. But at a really basic level, you don't have to mint new LUNC to do that.
All right. You don't have to mint LUNC to do that. So let's look at the different scenarios, right? So we don't mint LUNC. We go ahead with the rest of phase one. What kind of hit does you were talking about, the hit that the validators might have to take up front? What happens to the price?
They take they have uncertainty. They have more uncertainty. Like they're getting like long-term, like the machine is the dual token machinery is put back into service, and so that in the long term that will fund them, but in the very short term there would be a whole bunch of LUNC that would be that's guaranteed to them right now.
Well, this is the validators you're talking about, right?
Well, the validators and the stakers. The validators and the stakers are the validators get a commission.
Yeah.
But this 90% plus of that is going to the stakers, and then the validators just clip 5% or whatever commission on the LUNC that they're staked with from the stakers.
And what kind of effect does it have on the price of LUNC? Short term, long term, whatever.
So the only effect on the price would be you'd have to somehow sell that LUNC for BTC, or whatever, if the community decides that BTC is a terrible idea, like for whatever collateral that you choose, you do have to sell that into the market. And I guess the good news is that our liquidity, that's like, I don't know, 1/10 of 1 day's trading volume or something for LUNC. So that's pretty small. I guess the bad news would be that the on-chain volume is so low that you couldn't really do it, but it would be much harder to do it by smart contract. You'd have to like trust somebody with like $85 million to do it on a centralized exchange or something, which I don't think, I don't think the community should trust anybody with $85 million. Like that's not a good call.
Yeah.
I think it should be done in a way that's bulletproof, where just the community completely controls every step. And for that to happen, it has to be all on chain. So, so we have to do something about, we have to kind of restore on-chain liquidity somehow. And that's probably like the biggest, like that's the most important thing. And I gotten that question from at least 2 people on Twitter. When we posted the questions, it's like, what's the most important thing that needs to happen for this whole thing to work? It's to actually get on-chain liquidity back up, so that we can do things like create a smart contract to match 300 billion LUNC with 80 million US dollars worth of BTC, and then have that reserve, that decentralized reserve, funded on chain without having to like trust you or me or Tobias or Ed with with $80 million that we could just like run off with.
Yeah, don't trust me with it. I'm out.
Yeah, me neither. That's too much. It's way too much.
All right, so we've got a basic layout of what phase 1 looks like without minting. How does it differ if you were to mint, under 100 billion, like you said? What would be the benefit there?
I mean, you would just make decisions, like you'd say, okay, we could do a curve pool. We could set up a curve pool for like 5 million USTN by $5 million worth of USDC, or they have this thing called the 3 curve. It's like a derivative. It's like a mix of like USDC, USDT, and DAI, I think. Like the 3 big stable points, but it just basically allows people to very frictionlessly like buy your token on the largest decentralized exchange for stable coins and stablecoin like things in crypto. So that would be a big, like Terra's, under Terra's old system, they had a huge curve pool. Their curve pool was like over $1 billion worth of money just sitting there. And so, but that was a key kind of adoption gateway for the UST stablecoin, right? So that would be, you would think of it as like an investment in accelerating adoption and like turning the lights back on, and like enabling more entry into your ecosystem.
Okay. So I guess in a nutshell, minting a little bit gives you more flexibility to do some more things that you wouldn't be able to do without minting.
Yeah, accelerated adoption of the token faster than it otherwise would be.
However, obviously we're adding dilution. So all right, that's all well and good. Okay, you're probably reading the chat along with me.
I'm not. I don't.
You probably don't want to.
I'm like a very one-track mind guy.
Yeah, you might not want to.
Yeah.
I mean, listen, you've got people that understand this plan of yours, okay, that respect and trust you, respect and trust Ed, respect and trust all you guys, and so they're with you on it. If you say that it's good, then it's good, and there are those people. But there are also those people who don't even disagree with you a little bit. They are adamantly against this. Alex is trying to destroy this, is what they're saying, right? So now, tell people, if you do this, how and when does it benefit us?
So if, let's say in January or February, we fire this up and like we re-enable the swap. Okay, so we got the collateral, we've got our capital control system set up. We got all the things that we think we need tested and perfected. We would reopen the swap with very tight parameters. So there's for any listeners who are less familiar with how Terra used to work, Terra had this it was a dynamic. It was called the capital control system, or the swap tax, or the exit tax. And the basic idea in it was, if you tried to withdraw your UST stablecoin when times were when like nobody else was trying to withdraw, you paid virtually no tax. But if you were running for the exits when everybody else was running for the exits, like there was like a bank run happening, you would pay up to at least 50% tax if the stampede out was high enough. I think it could theoretically go as high as 100%, but I don't think it ever was much higher than 50% for any length of time. But so the way we would manage the risk is we would reopen the swap with like basically very high exit taxes, or like so that if people wanted to dump their stable coin, or they want to dump their tokens, their pseudo stable token, unstable coin, or AFT, whatever it is, whatever we decide, I think they get taxed pretty hard on their way out, and then that money would then get recycled back into the ecosystem, and we would be fine. We would just redistribute that amongst ourselves, and then the people who stay would stay, and they'd be happy kind of users and consumers of our products. So we would reopen the swap in a very, very restrained way, and then just very slowly loosen the restraints over time. And so it's very hard for me to see how that kind of a thing would blow this, would be a risk of blowing the system up. Like, I think
all right.
We can pretty much control that. Like,
so it may not blow it up, but all right. Strictly from an investor's point of view, okay? A bunch of us bought LUNC. We bought it after the crash. Some people are still holding on to it prior to the crash, okay? We bought it hoping that we'd restore governance. We did that. Restore staking. We did that, okay? And then the mindset for the majority of the community probably was that shortly after that, we were going to burn off as fast as we could all of that supply. The price was going to go up, and we were going to make money. That's it in a nutshell for the majority of us, okay? So right now, we know that we've burned off so far with the burn tax, and with what Binance did, and with all the initiatives, Lunatics and everybody else, right? We've burned off about 14 billion, somewhere around there, okay?
Okay, yeah.
At that rate, some of us
it'll be 30 years. It'll be 30 years.
It could be, in optimistically 15 or 20. Okay.
Right.
So this plan, I want to know how this plan is going to give us what we want. How is it going to raise the price, make us rich? That's what everybody wants to know.
Not financial advice. Nothing.
Right.
Nothing is guaranteed. I made a crude attempt. If you share your screen with the audience that has the paper pulled up, the original 20-page paper pulled up, if you share that screen,
is that what I had up earlier?
You did.
Okay. Let me see if I can get back to that.
They had that's triangle with the circle. Yeah.
Yep.
So if you go down and you scroll all the way down, I should have put this page on like the cover page. If you go to like the second to last page, maybe.
Okay.
Go like all the way to the end. There's this table close to the end. Keep going. Keep going. Keep going.
Oh my God, Alex! How many pages in this thing? Here we go.
Too many.
So tell me when. This is the
Oh, you
second.
go up.
This is
Go
the
one.
second.
It's the page before this.
This one here.
Yeah, right here. Okay, right here. So it's funny because I was like, I guess when you upload a PDF to the site that I use, you can see how many people like read every page. You can see like the attention span of like the audience, and I think like 19% of people who opened this got to this page, and I was like, fuck, I should have like put this on the cover. But
Okay.
yeah, so you see here, this is my attempt, and this is, there are a lot of other variables that go into this over time, and I talk about some more of them like after this, but this is just sort of a crude modeling attempt at how much, like, so I have USTC supply up there at the top left. It should say like USTN, because we're talking about we're talking about the AFT supply. Like, how much does like growing adoption of the AFT impact the burn rate on the LUNC token supply, which is the third column.
Yep.
Okay. And you can see that if we hit, if we were, and this is with, so this is with the like the 7%, 7% dilution, right? So if we went to, but we could go with a 0% dilution, start at 6.9 trillion tokens
and just so everybody is following with us, when we're talking about dilution, we're talking about minting. We've minted enough to dilute it 7%.
Right.
Okay.
So you can see here that this is like basically the relationship between like growth and adoption of the AFT on the like leftmost column versus how quickly LUNC tokens would be burned. And I go down to about 19 billion here because that was like how big Terra got in 1.5 years. Okay. And so you can see that, and there are a lot of other assumptions here. This is like, in my opinion, this is like a floor burn rate, not a ceiling. This does not include like other things that could drive burns. This is just purely burns driven by growth in the AFT, like money supply. Okay, so by 1 billion of AFT in circulation, you would have like burned over 1 trillion LUNC in circulation. By 5 billion, which I think is a highly achievable sort of 12-month target, you could burn 2.5 trillion. You could burn basically 2 trillion from where we start out, from where we are today, or 2.5 trillion from the like post dilution point. So this was just my attempt at trying to give people like my impression of like how much AFT in circulation equals how much LUNC gets burned.
All right. So the question that has come up in a lot of the chats that we've been in, Matthew Perry's live chat this morning, people still are just not getting the correlation as far as, all right, you're saying that if we have that much USTC in circulation, then it burns this much, but how? It's like, where's the missing link? Like, how explain as simply as you can.
How does like more USTN burn LUNC? How does that work?
Yeah. I mean, I think I get it, but explain it as simply as you can.
Okay. Let's scroll up a bit, actually.
Where are we going?
Okay, right there. So it was like right above the table. Down. Okay. Yeah. Okay. So under the very old Terra system, for every extra dollar of UST that was put into circulation, almost $1 worth of Luna would be burned. Okay. That was the initial system that they had.
Right.
And then Do Kwon and TFL and Jump decided that was too risky of a system. They needed some BTC, like external collateral, as like an insurance reserve to like protect the system in case there was like a death spiral event, because they actually had a death spiral in May of 2021, and then Jump had to bail them out. And so after that happened, they were like, okay, we need to do things differently. So they decided, it seems to me like they decided on like a 20% external collateralization level. Like, so like if they had 10 billion UST in circulation, they wanted like 2 billion worth of BTC kind of sitting somewhere that could be used to defend the system.
Mm-hmm.
That obviously was not enough based on what happened. And but if you have a 20% collateralization level, that basically means for every dollar of UST, every like additional dollar of UST that was adopted, it would burn 1 minus 20% level of Luna. 1 minus 20% dollars worth of, so like 80 cents worth of Luna, basically. Does that make sense?
Yeah, no, I'm with you. Go ahead.
Okay. So, but 20% was not enough. I think based on my own conversations with external investors, plus like, intuition, I think a 40% would be the absolute bare minimum.
Yep.
I think 50 would be the minimum for kind of institutional investor credibility. I think 60% would be considered quite healthy by anybody who kind of buys into this general idea that you can have an AFT that is collateralized at under 100%. So that's and this all is going to be like stress tested a lot once we get, if we decide to proceed with this and build like a BTC a BTC implementation on the Terra chain, which does not currently exist, and we need to make it. We definitely have to stress test this, but I think 60% would be plenty. It'd be quite conservative, and that could be. There are ways to bring that down over time that I talk about, like below the table, but that's the bottom line. So that was how the original mint and burn system worked in old Terra, and so we're kind of taking that and then saying, okay, we need to have a more conservative version of that has a much safer level of collateral, but still does a good job burning. So that's how that works. Did I go way professor overboard there?
Yep, and you always do, but that's okay. We love you for it. I'm gonna ask you like this, okay? This is as simply as I can put it. Let's say we're looking at phase one, right? And let's say we're looking at phase one with the approximately 100 billion minted, okay, to give us the wiggle room that we need.
Let's just say zero. Let's just say zero minted, because that's totally doable. Like,
well, okay, but that's not my question though, right?
Okay.
So we have to go with let's say we go with the 100 billion that's minted, okay?
Right.
So we say, all right, let's go with Alex's plan. Alex's plan is great. He's going to mint maybe up to 100 billion, and then we'll think about the rest of it. But 100 billion, without looking at charts and without explaining all the nuts and bolts and cogs, right? Best case scenario, worst case scenario. How fast can you burn that off plus the rest of the supply that we want to get going?
I mean, burning off 100 billion of LUNC it could happen very fast. It could happen in weeks, months. I don't know.
Is that best case scenario, weeks, months?
Yeah, I mean that would mean that like demand for the AFT probably goes up from 150 million US dollars worth to like 250 million. It's just not that much. Like that could happen. That could happen very fast.
But burning off the 100 billion that we diluted
Yeah.
just gets us back to where we are. So
Right.
how fast, best case, worst case scenario, implementing this plan, phase one, right? How fast can is this going to burn off the rest of that supply that we're trying to get rid of? How fast can we burn off another, 5 trillion, 6 trillion?
I'd say that like plausible best case would be like a month or two, like plausible, like plausible bull case, not like unbelievable every 25 out of 25 things go right bull case, but like kind of plausible bull case.
Okay. So
I don't know. I'd have to like do more number crunching, because that goes back to like the capital control system, because that's two ways. And if you throttle it, the money on the way out, it kind of throttles it on the way in too. So that's like a different community. I'd have to honestly, I'd have to I don't want to make up a number. Like I'd have to crunch more numbers and think about how I would crunch numbers. But I'd say 1 to 2 months is like the realist, plausible, like bull case.
So in the best, because you understand, this is the question that everybody wants to know. We've got this 6.9.
And this also, by the way, assumes that all the current burn taxes are gone as well. I mean, they don't, I mean, not that they can stay, but it's going to be a really big barrier to adoption of the AFT if they stay.
So implement your plan, mint 100 billion, and get rid of all the existing burn taxes.
If we don't get on-chain liquidity restored, I would say you can't have a decentralized reserve, because a decentralized reserve needs to execute transactions on chain. And if we have no liquidity on chain, which is what happened after the burn tax was implemented, then is the chat going postal right now?
Since we started,
it's been going postal. Okay.
That's all right.
No, so yeah, I'd say that's a big. You got to get the on-chain liquidity back up, where this whole set of ideas is going to be running on a really, really, really low level of liquidity, and it's probably not going to work.
So burn tax stopped, right?
Or cut down to 0.1 or 0.2 or something. 0.1 or 0.2 is probably not going to really affect anything. I mean, Binance is a 0.1, so I don't. It probably settled on 0.1 because that was the point where literally nobody cares anymore, and that so 0.1 is very likely fine, but 0.2 is probably pretty close to fine. I would say I would guess that if you started going up much above 0.2, you start to really discourage transaction velocity. And I mean, TFL experimented with this a lot internally. They had a 0.25 for a long time. They dialed it up to 0.35. And I think then they dialed it back down to 0.25, and then they abolished it completely because they decided, based on their experimentation, that just having fastest adoption of the UST unstable coin was the best way to just burn Luna supply.
And a lot of people are speculating that 1.2% is actually the cause of lower volume right now, that it's too high. Yeah. And you feel the same way, I'm assuming. I mean, I have heard from people that we both know and love that it was a bad idea altogether to do this 1.2% tax. So it's a little, what I appreciated about you guys is that a lot of you came out from the beginning and said, we don't think the 1.2% tax is going to do anything. As a matter of fact, we think it's going to be detrimental. But you as a community voted for it. Our job is to establish governance. And, you know, if that's what you vote for, we're going to make it happen because that's what our job is.
I think it was essential that we tried it.
Yeah.
Okay. Like there was no avoiding trying it, right?
Do you think we've tried it long enough?
Like, huh?
Do you think we've tried it long enough?
I mean, I would say if your LUNC volumes are down 90% from prior levels, and your USTC volumes are down like 98 or 99, I'd say that's sorry, I was just gonna say something that I feel like we're not talking like 50 shades of little variances here. I mean, that's like the patient flatlines, that's like, so I feel like when the numbers are that drastic, it's like you gotta respect the numbers and kind of candidly talk about what's next. But
Okay.
That's just me.
So, all right. So that all being a given, okay. What we're talking about with this proposal is some tough love. And it's going to be, it would be a tough pill to swallow. It would feel like an extreme step backwards. But what I had said in one of my previous videos is that sometimes you have to take a couple, if you really want to jump far ahead, sometimes you got to back up a little bit and get a running start. And that's kind of what this proposal is asking of us. I'm sorry, Richard, I don't know if you're looking at the chat. Richard, you are unbelievable. Thank you very much for that $100 super chat. I have every intention, guys, of going to the chat and answering some of your questions, but some of these things I really wanted to kind of get out first. But I got this big red box in front of me, so I have to read this question. Richard sent a $100 super chat and asked the question, I believe the consensus is if more coins are minted, it would kill the momentum that we have going. We are trending everywhere. So I guess how do you respond to that? Because that's pretty much the sentiment of the majority of the people in the chat.
I think from a social media, just meme magic standpoint, like you guys are doing a spectacular job. I'd say that's separate. That is doing really well. But I would say from like an on-chain economic policy perspective, I think there are a lot of other narratives that we can drive, a lot of other ways we can like more efficiently burn supply while also having like rich on-chain liquidity and having dApps be able to like function the way they're supposed to. And like there are a lot of other ways that I think that I've been that I think will get everybody where they want to be in a much faster rate with a lot more dApps and other kind of fun things to do on the chain. I don't think anybody wants to wait 25 years.
Yeah.
25 years in blockchain. I mean, 2 years in blockchain is eternity. Like, I mean,
yeah.
You don't want, once the blockchain world starts passing you by, it's very, very hard to catch up.
So to everyone in the chat and everyone who watches this later, I mean, here's the reality of it, okay? No, I don't think anybody is denying that what we've got going on right now with the burns is great. It's a great initiative. Vegas came up with this 1.2%, and we all jumped on board with it. We initiated it. Everything is going beautifully. But now that we have it, I think it's clear to see that, we're not burning this thing off in a year and a half, 2 years at this pace with what we're doing right now, the way everybody kind of fantasized was going to happen, okay? There have been warning voices since the beginning that told us it wasn't going to work that way, but we all had our hopes and dreams, and now the reality is setting in. that the burns are awesome. We appreciate everyone who's trying to do it, everyone who's doing it for the community. It's great, right? It's a community strong. Okay, but it's not going to burn off this hyperinflation, that we
Right.
took on in the time period that we're hoping for. Now, if you're 20, 30 years old and you've got 30 years to become a millionaire, go right ahead. I'm in my 50s. I would like to.
You're
I would
looking
like.
good for a guy in your 50s. I would not
I
have guessed
look
that.
damn good, Alex. You're absolutely right about that, and this is why I appreciate you. No, I'm just kidding. Somebody earlier said Alex is cute. Somebody said that in the chat. Okay, so I mean, it was somebody named Fat Man, but that's beside the point. So anyway, yeah, that's not going to happen, and so there are several different initiatives out there. Alex's is the one that we're talking about today, that says, okay, now that you realize that's not going to happen, like we told you, here's the tough pill to swallow. We've actually got to add more.
Don't have to. No,
We don't
you
have to. We don't have to. We don't have to. I understand, right? But if we do, it helps a little bit more. Okay. If we add,
It's an option.
it's an option.
Take it or leave it.
It's an option. Okay. We don't have to. We can go the route that we don't. Might take a little longer if we do it that way, but we can do that. Okay. But that's what we got to do. We got to take a couple steps back. And if we do this plan, okay, we can potentially burn off, even if we do add some or if we don't add some, we can potentially burn off maybe 6 trillion, best case scenario, in months instead of in years. I mean, is that in a nutshell what
The
we're saying?
curve that I have, I think, and this is just from the AFT adoption. This does not include burn, like let's call it tax revenue from other sources like dApps that are built on our chain that might become popular, like a blockchain video game or something. But so I think the bull case is that the token supply is cut in half. I'd say every 18 to 24 months, or if the price does not go up, because the more the AFT is adopted, the higher the price is going to go, and that means that if you're burning like $1 for every $1 of AFT, you're burning 40 cents worth of token of LUNC. You burn a lot more if the price doesn't go up as much. So if the appreciation rate of LUNC is a lot slower for whatever reason, you will be burning way more token supply than that. But in reality, you're going to have this kind of consistent relationship where you should have like this. As you burn more, the price is going to go up, which means that the number of tokens burned is going to slow down, but your price is going to be going up a lot. So you're not I mean, on the curve in that table down below, I think it gets by 20 billion USTC in circulation, you get like a 40x return or something on your token, right? So do you really, or maybe it's, I forget what the exact number is, but it's like, okay, if there's 3 trillion in circulation by then, but you're made at 30x, let's say, like, how put out are you really that you're at 3 trillion or 4 trillion tokens by then, as opposed to like 1 trillion? You've crushed it. Like, I mean, 30x returns that's really rare. That's so.
Yeah. All right. Yeah, I follow you. I got you on that. What's this saying? The definition of crazy or whatever is to do the same thing over and over and expect a different result, right? So if we keep doing it this way and just expect that all of a sudden it's going to change, I mean, it might not. So is it possible that if we just keep things the way it is, Alex, right? and we bring on more utility and more burn initiatives come out, and we take that path, is it possible that we can narrow down that 15, 20, 30 years? Is it possible just on this path that we can get it down to 2, 3, 4, 5 years without doing something like it?
I mean, I I have my axe to grind here, but I would say it's the reverse, because I would say it's actually the reverse because, and I don't have all the information here, but from what I understand, what Binance is doing for us is pretty temporary. Like I think they committed it to 1 month when they did this. That's what I was told, and they wanted unspecified concessions to continue it longer than a month, or either concessions from us, or they wanted to see, or they look at, like, if they're getting more and more LUNC accounts coming on, and it, like, basically this is like a successful marketing investment, then they would probably continue it. But
You're talking about the
just
weekly burn.
I'm talking about the Binance off-chain burn.
Yeah, right.
So my understanding is that that's quite temporary, and they're going to be demanding more concessions from us in order to continue this, which is going to slow the rate of the burn, and then that's going to keep our on-chain liquidity, which is that's like the source of all DApp. It's all about what's on-chain. Like, it's always better if you have more people punting your LUNC receipts on Binance or KuCoin or whatever. Like it's always better that someone is doing that as opposed to if they're not. But in terms of like what your chain can launch and like what dApps can get funded on your chain, that's all based on what's on chain. So if you're looking at kind of like the health of a chain, it's much more important to just what's on chain as opposed to what's off chain. And we have driven all of our liquidity off chain, and we basically need to bring it back.
Yeah.
And I think we drove it off because of the tax policy. So
Michael in the chat says, with more CEXs, if more CEXs get on board, more utility, there's no reason we couldn't shorten the time. So
But what's Binance going to say if we give KuCoin that free lunch? They're going to say, "Oh, well, we made a deal with you. This was our deal with you was that we get a special deal. We don't want you to do that with KuCoin or Huobi or So I mean, that's how I would think if I were Binance. I'd be like, we're writing you this, $2 million a week check or whatever it is that they're doing. Like, we don't want you to, like, we don't want KuCoin getting the same privileges that we don't want you to like make a deal with KuCoin, like,
right.
So
Alex, you have your you definitely have your followers, your fans. Travis says he said we
that's
need...
good to hear. That's a big change from last time.
Yeah. Travis said he said we need to mint the 100 billion to burn the 5 trillion supply in a few months. How can you guys not want that? The 1.2% tax will take forever. So I don't know that we're split down the middle, but there are definitely some people.
It's progress. It's progress.
It's progress. It is absolutely progress. And I have to say to everybody, I am not by any means promoting Alex's plan or this plan or that plan, but I am promoting that we do something different than what we're doing, because I personally don't see, it's a very good argument Alex just made, as far as bringing on different CEXs. In theory and in a perfect world, yeah, I see you guys' point. But unfortunately, it's not a perfect world. We have businesses that are in business to make, money, and they're cutthroat, and they don't want the competition. And if you do that with them, then we're going to screw you this way. And this is the reality of the world as it is. And I know that if we don't do something different, we are going to stay on this path. I'm going to have to work till I'm 73 years old, which I really don't want to do. Okay. Alex, you're very aware of the other plans, the other, kind of prominent plans that are out there, and it's yours and maybe two others that
I'm
I can
actually
think of.
not really.
Okay.
I think I have a vague idea, but I really like I've kind of had debates, I think, with the authors of those plans over the past 3 months. But I'm very interested. Like I'm very interested to see what they come up with, and I don't know. Like I guess I think though in my mind there's like four possible paths that we can take.
All right, let's hear them.
For like well, we can take kind of the one kind of this one, which I the one I presented, which I think is probably the most true to what Do Kwon was trying to do, and is basically a much more conservative and safer implementation of that, as like a genuinely decentralized, uh, you know, fungible token. You then have what I call the wrapped USDC route, which is we're going to just for every USTN we put in circulation, we're going to have $1 of USTC, or sorry, $1 of USDC or USDT or whatever sitting in our treasury, and we're just going to be like a 100% or 95% like USDC collateralized token, which first of all, that like pretty much guarantees that you are a stable coin because you are using like the assets of backed by a sovereign country as your collateral. So that is like in the definition of like the legislation that's going through Congress right now, that you are a stable coin if you do that. So that means you better think about getting a banking license and all kinds of other stuff that whatever. That's a path, but I also think that nobody really has a reason to use something like that. You just use USDC instead. Like if you just used USDC instead, it would just be more efficient. It'd be lower transaction costs. You'd have less like kind of smart contract risk. So that's a path that I know has been talked about a lot that I'd be very bearish on. And then you have the path taken by DAI or Kujira, they have, which is like crypto over collateralized, which is very safe, and it's also like beyond government regulation because it's using cryptocurrency as its collateral, but it's using like it's using like $1.60 of Bitcoin to back every dollar in circulation, and if you need that much assets to come in per stablecoin that you are issuing, you basically can't grow. And so all those sets of models are very safe. Like they've held up their currency pegs under really fierce bear market conditions, multiple cycles now, but they can't grow. And then you have the kind of, I call it the ample forth path, because after this one, like not well-known stablecoin called ample forth, and that's a system based on really, really, really tight capital controls that is pretty much solely based on that. And that particular approach, like it checks the boxes of being sort of an invulnerable to bank run system, because what it does is it just like every time if you have like $1.20 and like there's a bunch of people withdrawing, then it just hits everybody's dollar balances by like 20 cents or something to bring you back to $1. So it's like, okay, great, you like check you have a perfectly systemically stable thing, but no user knows like what their money is going to be worth tomorrow, or how it just like puts all the uncertainty down to the individual user. And so every user like, this is dumb, I don't want to use this. So like ample forth has never had a bank run or anything, but nobody wants to use it because it's a stable coin or whatever, stable token, whatever they call themselves. It's not stable enough from the user's perspective. So those are kind of the four paths that I think we can take. And
Well, the fifth path is to take none of them and just keep doing what we're doing, right?
Well, that's true. Yeah, you're right. That's to just say, you know what, we're not in we're not in the dual token business anymore, and we're just going to be like a Cosmos chain. Yeah, that's true too.
So, speaking on this dual token system, this AFT, this algo fungible token, which would be called USTN, yeah.
Whatever the community wants.
What was the end? Just out of curiosity, we don't have to go into detail. What was the end for?
New.
You-
I mean, yeah.
I,
Source. I
okay.
made it up like that.
I thought it was something so much more complex. All
No.
right, that's awesome. USTN. All right. Your plan hinges upon this AFT, this UST new token. Without it, you kind of don't have like the rest of the plan kind of falls apart. I mean, pretty much, yeah.
Yeah, if nobody wants to use this, then my idea is not gonna. Then it's not gonna. The community is gonna be sitting on this pile of BTC, and so it's not gonna be like a big loss, but it's also it's not gonna be doing what it was advertised to do.
And it sounds like you've been trying to keep up on legislation, and I mean, there's new stuff coming out. It seems every day lately. They seem to really be pushing. Um, what gives you the confidence that this algo fungible token is absolutely going to circumvent uh, the regulations that are coming for algo coins, for all the different directions that they're coming? What makes you think you're going to muddle your way through with this thing?
I'm gonna I'm gonna try to be very cagey in how I answer this, but I think there is a lot of stuff that the current legislation. So right now, in my opinion, the SEC or like other kind of very aggressively anti-crypto regulators are really drawing debt in terms of like how much power they can have over crypto, because the Supreme Court really undermined. But before this summer, like there's this idea in U.S. law called Chevron deference after some case from I think the early '90s where I think it was like Chevron versus Environmental Protection Agency or something, and the EPA asserted that they had control over some piece of land because of some exotic, like endangered species rule or something. I don't remember. I don't know any of the details at all. But let's just go with this. And Chevron was basically like that's you're like stretching this so far beyond what's reasonable that like it's this is just ridiculous. You don't actually have jurisdiction over this. And the Supreme Court ruled against Chevron, and they said, and they basically created this doctrine of Chevron deference, which means that it's sort of like the burden of proof is on the person that the government is suing, or the corporation that the government, or whatever entity that the government's suing. Like you have to prove that the agency does not have jurisdiction. The burden of proof is on you to show that they don't. And so this caused like all these U.S. agencies to just like assert control over all these different things, and it made it very hard to fight back against like an SEC, for example, that would assert that it has total jurisdiction over Ethereum because more Ethereum servers are in the United States than any other country in the world. It's like 25, and like they literally said that in a recent court document, and that's just like ludicrous from a legal or practical perspective. But anyway, so the Supreme Court basically like killed that high level of deference earlier this year. And so, and meanwhile, there's like, they basically said like the law has to specifically give an agency jurisdiction over something, or you don't have jurisdiction over it. And so there's literally no laws in the US on crypto basically. And I don't think there's a legal definition of a stablecoin even in US law. And they're trying to define that now.
I think there is, but we'll get to that in a minute. Go ahead.
There's like Wikipedia, there's like commonly accepted practical definitions of it, but I'm not aware anyway of like a legal definition of a stablecoin. But regardless, like U.S. law is U.S. financial regulatory policy is already so hostile to stablecoins. Like a bank cannot hold USDC on its balance sheet. It can hold it. That's basically like complete equivalent of cash. But it can hold subprime mortgages on its balance sheet, no problem. So like we're already dealing with this very hostile regulatory climate, and so we should probably structure an AFT like structure in a way that insulates us, that gives us a lot of freedom to act, to like basically reduces attack surface, as we call it. So I can't predict what the U.S. government's going to do. I think based on what, as I think I was talking about in the first or second page, or no, it was actually the very last page of the paper. I said I'm not even sure the currently drafted legislation would cover the old Terra stablecoin, which it was clearly trying to cover, and that just shows kind of how poorly some of the DC people writing this bill understand our industry. And anyway, I don't have a crystal ball, but I think that I'm not very worried about it.
I heard you. Okay, you're not that worried about it. I heard you talking about this yesterday on your interview yesterday, and you were giving the example of like, if there's a puddle, and they can say, okay, well, you got a puddle in your land, that's wetlands, and we can go now, and now you've got to prove that it's a puddle and not, So, all right, I get all that. Now, I can tell you that I have absolutely no reason in my line of work to follow this kind of stuff, to be up on what the legislation is and, how the regulations are going to come down on cryptocurrency. I mean, I have an interest in it because I'm invested, but as far as what the legality actually is, I don't really personally delve into that kind of stuff. Do you know who 3.0 DAO is?
3.0 DAO?
3.0 DAO.
Mm-hmm.
No? Okay. So 3.0 DAO is an organization, a group of men and women who have a super PAC. And the super PAC is actually run by the blockchain. It's a community-run initiative. And basically, these guys and gals are in the mix. They are working directly with lobbyists in Washington daily. They're working directly with the lawmakers all over the country. And so when I have questions about the legality of something like this, that's who I would actually go to, because
I'd love to talk to them if you could put me in touch.
Give me a second, because that's coming up, right? So I did an interview with them not long ago, actually, and if you want to review it, you can kind of review it. It's on the channel, okay? The man that I speak to is Dr. Randy Romich. And Randy, like I say, these are the guys, we're all on the outside and we're trying to read these regulations and we're trying to figure them out for ourselves and see what they mean. These guys are in there. They're in Washington. They're on the steps. They're talking to people, right? So I asked, and I want to, if I can pull this up, I want to show you this. And Randy said it's okay. But I asked Randy about the likelihood that your AFT would be able to circumvent what's coming down the pike regulation-wise, okay?
Okay.
And let me pull this up, and I want to show you what Randy had to say. But I can also tell you that they are very interested in talking to you as well and helping you in any way, shape, or form. So let me see if I can go to this, okay? All right, so I had asked him about, again, whether it was going to be able to circumvent or whatever. Am I logged? All right. So Randy watched the video. He watched the interview that you did. He read your roadmap. He read Ed's paper on Medium. Okay, and after reading all that, this is what he says. So after watching the video, sounds like Alex needs 3.0 to be the regulation side. B, stable coins are considered digital assets pegged to a stable unit, such as $1.
Which we're not really.
Okay.
But
He's right that they haven't defined crypto securities yet, but all indications across the CFTC and SEC are aligned that a large majority of assets outside of, I gotta move our little picture here, outside of BTC, Bitcoin and Ethereum, will be securities. They also basically have said any protocol that has active leadership, which encompasses a DAO, individuals, dev changes, ability to start and stop trading, etc., will be considered securities.
But we have no leaders.
Okay. Well,
our chain does not have any.
Okay. So that's probably good. Okay.
Yes.
So blah 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 blah. That, he was talking about some other things they were talking about. But let me. Now I can totally Tesla. Blah 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 blah. Found regulations. It sounds like he's thought about regulations, but is kind of waiting on more guidance, which I totally get. But if he needs DAO to DAO partnership for guidance, I know a guy. He's talking about himself, obviously, right? But seriously, the reason the government is leaving it loosely interpreted is to branch everything together through loose definitions, hence calling all of them digital assets instead of having classes. And then I asked him to kind of truncate it and make it simple for me. Let me see if I have that. Thank you. I'll read this shortly. I said, okay, you may have already said it, but in a nutshell, is this AFT thing going to get past regulations or no? His answer was probably not.
Well, what do you mean by get past regulations, right?
Well,
you can, right now, a U.S. bank cannot have USDC even, right? It's sort of the whole stablecoin and other kind of pseudo unstable coin part of the market is pretty much embargoed from the US financial system right now. That's a thing that could change and cause an explosion in the success level of stablecoin and stablecoin-ish protocols later. But right now, regulated finance pretty harshly embargoes anything stuff that's way more conservative than this. But so how's the US government gonna, if you as an American want to do a loan to a business in some other country through this AFT, for example, it's not illegal for you to do that. And even if the government were to say, well, I think this is a stable coin, and I think for you to market this to an American, you have to check these 27 boxes. We say, okay, well, we're not going to market it to anybody in America. Not that we have even a decision, because we don't control the protocol. There's no TFL or central legal entity that can even be attacked. Who's the government going to attack? Is it going to bust down your door because you decided to trade a token with someone?
These are great questions for Randy.
Yeah.
And he wants to chat with you about it. Let me finish his reply was probably not. If it does, they'll find a way to loop it back in as a digital asset. Basically, assets run on smart contracts and blockchains. And then he sent me this quick read on definitions from the bill. Now, this is all in legalese. I have no idea what any of this means, but I will send it to you if you want to read through it. And if you're interested in getting in contact with Randy, they are absolutely ready and willing to get in contact with you. They actually have some ties to the LUNC community. I believe they're also invested. And
Interesting. Okay.
and so they basically what he said to me in another conversation is that they are not looking for any compensation, anything like that,
Good.
whether it's
Good.
you or anyone else involved in this, okay? But they want to talk to you about the best way forward, whether it's the AFT or whatever else is going on. They want to talk to you about the best way forward, and if there's any way that they can help with upcoming legislation and chatting with the right people to push the proper agendas to help out this community and these plans, they want to be able to do that.
Music to my ears.
It's
LFG.
music to everybody's ears. It really should be, right? I loved hearing that. And so I'm gonna, if you're willing, and it sounds like you are, I'm gonna put you guys in.
Of course.
I'm gonna put you guys in contact, and let you do your thing because I don't understand any of it. But once you figure it all out, if you'll come back and tell me what you came up with, and maybe we can all get together and chat, that'd be awesome. But
Absolutely.
I just want you to be, because I know there are very many people who are thinking exactly like you're thinking. What can they possibly do, right? I've heard that from other people. These guys seem a little more cautious about it, and it bothers me because they are in the mix. They're hearing things that are brewing before they even come to light and we see them.
We've also got a big election in November and a lot of stuff that can change then, and
Right.
this bill is not going to go anywhere. And there's a lot of things that we don't know about
Right,
the future, right?
Right.
Um,
But they know some things that maybe we don't all know yet. Right?
Totally, yeah. I love
So,
to
so
love
they're
talking to
they're
them.
a good organization to have in the pocket, and to have some sort of affiliation and partnership with. And again, they're not looking for anything other than to help. Okay, so yeah, I'm gonna leave it at that as far as 3 Dow goes, and I'm gonna put you guys in contact. Just know that they are looking to, whether it's you, whether it's Tobias, whether it's whoever that is moving forward on something like this, they want to talk to everybody and make sure that we're doing it in a way that is not going to end anybody up in some sort of battle with the U.S. government, with the SEC.
Oh yeah. I mean, you're dead.
Yeah.
The day that battle starts,
You're not gonna win.
You're looking at bankruptcy. So
Yeah, right. Yeah. So all right, that's where we're gonna go. Is there anything else that you want to chat about, or anything else that you feel like we didn't really get to, or anything else that you want to mention? I am going to take some questions from the chat if I can find some. But before I do
I want
that,
to run really quickly through a few people that left Twitter questions, because I promised that I'll try to get to some of them on the
Go right
Twitter
ahead.
feed.
Sure.
So Nara asked, what's the one thing you
That's
think
fine,
is
Richard.
essential in order for this loan revival to happen? Restoration of on-chain liquidity. Should we focus on burning and building utility first before risking LUNC? I think,
That's a common question.
yeah. I think burning in the current construct and building utility are directly with each other. So I'd have to say, right now it's all burning, no utility basically. So I would say we've kind of seen how the burning one is going so far. I would say you can focus on the building utility part while you're doing all these other things. There's nothing mutually exclusive about it.
Before you go on to the next question, can I? That question was asked when I last time I talked to Tobias to Zaradar. I asked him that question because it came from the chat too, and his answer was kind of similar to yours. Although he's a little more direct, right? And he said, I'm not waiting for some magic number for us to get to or whatever. He says, we need to get this fixed. We need to get this going. We need to do it. And we're not going to wait for, this amount to be burned off or whatever number you want to come up
he's
with.
right. He's right.
We got to jump in and do it now. That was, yeah. So you both agree on that?
Well, I mean, we have to do something about the current, I don't know. We have to do something about the current trade-off of like burning versus utility. I think I don't know. I think it needs to be steered very hard, like towards the utility direction, and then to find a different way to like deflate LUNC supply.
All right. So go on.
Sophia asked, why can't you start a new coin, give it time to see if it's a success? If it is, then link it to LUNC. Because you have to, the answer to that is you got to back the AFT with something. So you have to, for it to have any value, you have to have, BTC plus LUNC or whatever other specific backing first for it to have any value so that's the answer to that question. Let's see. Let's see. Oh, here's a good one that comes up a lot from Switch 1725. So he's like, why can't we use the Oracle pool to repay USTC to 50 cents and then build it up incrementally to 1 over a period of 12 months? So this question, or variant versions of this question, come up a lot, and it's a really good one, and I want to address it. So this gets a little nerdy, but basically if you think of Lunk as like this digital economy, right? You have to have a stable economy. You want to have a stable economy, and to have a stable economy means you have to have a roughly balanced borrowing and lending in your financial system at all times. And so if you have a stable coin or an AFT or whatever, and you say, okay, it's 50 cents now, and it's going to go to $1 over 24 months we think, based on all the, how we like hardwired the incentives to work and stuff. That's the equivalent of telling someone, okay, you're going to take out a mortgage for like $1 million in value, but when you pay it back to the bank, you're going to owe like $2 million in sort of USD equivalent value. So you're going to have nobody wanting to borrow money. You're going to have lots of people wanting to deposit money into that economy because they're going to be like, well, I'll double my money in 12 months, but you're going to have nobody who's going to want to borrow. So you're going to have this really big deposit to loan mismatch that is going to like guarantee really big instability. And that was actually like Anchor, the whole Anchor protocol related blow up was kind of like a version of this. And we have to be a lot more thoughtful about like the incentives that we create in the financial system that we're gonna have. So, but that question comes up a lot. It's a good one. So that's my answer to that.
Is that little mini ad Alex behind you? Is that who we're seeing through the curtain?
Oh, I didn't. Yes, that would have been.
He's a lot cuter than you are.
Yeah. I hope his luck with the ladies stays with him for the rest of his life. Yeah.
What else?
A lot of compliments.
You have anything else on Twitter? Because if not, we got some things going on here.
Yeah, fire away. I'm gonna have to bounce in about 5 minutes.
Okay. All right.
Let
me apologize to everybody in the chat, but I mean, as you can see, we've been chatting about a lot of stuff. So I'm getting better at this, but it's very difficult to go from this to that. Dyson fam, I'm gonna go to this just because it's funny. He didn't really send $100 super chat, but he just typed in $100 super chat.
That's rugged. Okay.
That's fine. Ask Alex, why not mint USTC? Other people have said that too. Instead, why not just fix USTC? Why are we going with this different coin or different token?
Good question. So that was our original plan, but we decided that it would be a lot more legally problematic to like seize USTC from different these different wallets. For example, we thought, and I guess probably the more important one is that a lot of USTC holders felt like this would be robbing them, like it was taking away all their like choice. If like the protocol just makes a decision, democratic vote to burn 97% or whatever of their USDC, then they just feel like they're completely screwed as opposed to other hypothetical alternatives. So if you just do this airdrop path, it's totally voluntary. It doesn't like touch any blacklisted accounts. If we were to, I mean, it's much cleaner and like respects a lot more of the like legal and personal choice if we do it this way. But our original plan was to go to USTC.
Okay. Can we repeg with no quantum mint? Does that make sense to you?
No.
Okay, me either. Why not a
With
long?
no quantum of mint, like no amount of
I'm
mint.
not sure. I don't think they really finished the sentence.
Yes, well, if that's what they mean, the answer is yes, because like we can use the Oracle Rewards distributor LUNC to like be the BTC collateral.
Okay. Gabriel Wagner says, and a lot of these questions I don't even, but hopefully you understand. Why not a long-term staking of LUNC? And then in parentheses he says those 500 billion needed to buy the Bitcoin and all the rest. 1 or 2 years at a good rate could be paid with the BTC having on the corner.
That's fine. I don't know what the on the corner part means, but
I'm not sure either.
But like that's totally an option, right? Like when I said like in my paper, I said like 21 day, it's like staked. The newly minted would be staked for 21 days, but we could lock it up for a year. Like we could do whatever we want. We could make a determination of whatever we want for that. I'm kind of in the camp that I'm not sure. Yeah, I'm kind of like I like to minimize uncertainty more. So I feel like if you just have this giant overhang a year later, as opposed to like when the system is much bigger and more distributed, it could be actually more uncertain, like a more uncertain thing to deal with than if you dealt with it sooner. But that's my opinion, and I don't know what the right answer is. We could totally do a 1 or 2 year lock.
Okay. Crypto Dream, thank you for that $5 super sticker. I appreciate it. That's my man, by the way, everybody in the chat. Crypto Dream has a great channel, and you all need to go check it out and subscribe to him because he's putting out some good stuff, and he's branching out, and he's a good friend and just a great guy. Okay. So Stellar Prism says use Oracle rewards to repeg equals nuke all staking rewards.
No, it doesn't, because you're gonna it's a short-term hit to restart the mechanism that fills the pot of staking rewards. If you do nothing, then it just dribbles to zero over the Oracle Rewards distributor contract. It's just gonna go to zero over 18 months. Right. So you have to do something. And if you don't want to mint, like this is where the money is that doesn't need to be minted, basically.
T says, what makes LUNC holders less valuable than USTC holders?
Well, we're treating them as, what makes them less valuable? We're treating them as, we're kind of shifting gears there.
I think what they're saying is maybe we're putting more focus on helping out the USTC guys, maybe at the detriment to LUNC holders.
Yeah, so that's why I think it makes sense to like break this proposal into 2 pieces. One is where we don't mint anymore and we just like create the AFT with non-minted like existing like LUNC that does not need to be minted, and then we talk about how we want to deal with USTC holders separately. I think the thing is, like, the USTN holders who will want to sell after they get their airdrop, they're going to get taxed quite hard on their way out. So the ecosystem is not going to actually lose money on those exits. And then it's just going to be left with like the happy former USTC holders who want to remain with the ecosystem. So it's kind of like we're filtering the people, and then we could, if there's like X number of people who got airdrops and like didn't interact with their account, we could say like, you have to do something with this USTN airdrop in 6 months or it's burned. Like we burn it or the community reclaims it or whatever. So we can control kind of everything if we think about it really carefully first. So anyway.
All right.
I would also say that sorry.
Okay, go ahead.
No, when you're in the business of, when you're trying to build a form of money, like money is like a network effect thing. So like you and I could start a 60% backed BTC, a 60% BTC backed AFT right now, or you know, tomorrow, and you know, we'd have two people holding, $200 of, and you know, AFT backed by $120 of BTC plus all my, all the other stuff in my paper. But it's like, who cares? Like, you have to have, the more mass you have of initial users, the more other people want to use it. Like, the more it becomes like a true currency equivalent, as opposed to just a shitcoin that like a few hundred or a few thousand people are punting around. So like, if you can just get more users for fairly cheap, that's very good for everybody. But anyway.
Okay. Okay. I don't know if you've heard about this. I get, maybe this is what the other guy was talking about. What's going on with the quantum mint rumors, and will a 2.5 trillion mint really be happening? Some are saying infinity supply. Any truth? Have you heard anything?
It sounds totally
Crazy, right?
yeah, no.
Yeah, but I've been hearing about it more and more, kind of all day, maybe even for the past couple days.
There's some sketchy, very sketchy seeming dApp that's been very like advertising itself really heavily on Twitter, saying they're going to burn 2.5 trillion.
Yeah. I haven't seen it.
It seems like a very likely scam. But that's the only thing I can think of that.
If it seems too good to be true, it probably is. I haven't seen it,
exactly,
but I've been hearing everybody talk about it. Of course, it's going to get everyone's attention. If I said right now on the stream, you know what, just to let you know, I'm burning 1 trillion tomorrow. I'm going to end up with, I'm going to have 5,000 subscribers tomorrow, right? But it's not going to happen. All right. So, will the repeg guarantee that both coins get back to $1? Do you want, not financial advice and predictions and all that, but what do you think?
So the AFT should consistently trade very close to $1, or, as I said in the paper, if the US government decides they don't like things that are pegged very close to $1, we could peg it at X times, 2.5 times the Saudi riyal, which is like super closely pegged to the dollar. We could, we can play that game all day too. But anyway, that's a peg that is like an exact flat line for like 10 years with the US dollar. Right? So we can do whatever we want on that. I'd say on the LUNC side, so if you think about LUNC today, if it were $1 today, that'd be $6.9 trillion. The market cap should be like 4 times the market cap of Apple. So not going to happen. I'd say
not at the supply.
I'd say you'd want to think about like, a decade from now or something. $1 is going to be tough, right? If $1 would be like a 300x return or something on your money, like today. If you put $1, I haven't crunched the numbers. I think that would be, I think getting it to a penny would be 30x. So I think getting it to $1 would be a 3,000x return, right? That is just not something that anybody should be like. It's a great meme, but it's not happening anytime remotely soon.
But after your plan, and after we burn off,
a penny,
5 trillion, 6 trillion,
like a lot more doable, and that's 30x. So
this year, next year,
obviously not financial advice. Obviously needs a lot of stuff to go right, but
this year or next year on that penny. And that's my when Lambo question.
I can't.
You're not gonna answer the when Lambo.
That's where you get in a little bit of trouble.
I know. I gotcha. Question, and sorry if I missed this. Will all existing USTC holders get airdropped this new coin? That was the deal. Right?
That's the whole.
Yeah. That was
step 2 question, which I think we need to like separate it from step 1.
And then at some point, USTC gets phased out in this plan. Yes.
we don't touch it. We just kind of say there's USTN now, and everybody keeps their USTC as is.
But what's it worth?
It would probably drop in value a lot after the airdrop of USTN is done.
Yeah, it's not going to be worth anything at that point, right?
I mean, thered still be a chance that Luna 2.0 could do something with it, or maybe some other Cosmos. I don't know. But it wouldn't be good odds.
So I've got my last question for you. If another good one comes up here and you've got a minute, I will. But okay, so what is this proposal going to look like on Terra Station? Because you're talking about now dividing it up into two. So what are we actually going to see for a proposal? Are we going to see two proposals, and when are we going to see them?
Well, so I think we're going to hear the other ideas. That's step one, is to let Tobias publish his idea and let the whoever else and then the community will noisily debate all the pros and cons, which I think is a great thing. And I think it's the best way to educate the community is to have these noisy debates and not have these closed door meetings and everybody agree. The Terra Rebels, College of Cardinals goes into hiding and makes a decision that nobody else has any transparency into. That I think is a huge disservice to the community, because I think it doesn't cost us anything to debate this stuff in public, right? We're going to have the debates regardless internally, and if we have them publicly, what?
As you've been.
Yeah, and but it's a really, really valuable way for the community to kind of learn all these weird, nerdy little distinctions that they should probably get familiar with and have their own opinion, so they don't have to just trust the whichever cult of personality, whether it's myself or Tobias or whoever. That's not the way a community should make decisions. A community should be skeptical and self-educated and make its own judgments separate from us. And the way to do that is to raise the education bar by having the experts publicly debate the crap out of everything. Yeah. So we have to get those three or however many proposals out. We debate it, and then I think we would say, okay, if the Alex proposal versus the Tobias proposal, we probably put them all up at the same time, and the chips would fall where they may.
So there's no date. We're not saying, hey, this proposal will be next week. And when you propose it, are you again? Is it two proposals? Is it the first phase and the second phase, or
I'd say just phase one. I'd probably just propose phase one, and then phase two it should probably be considered separately, and separately and after phase one, I think.
All right, Natalia agrees with you. I agree, Alex. I don't know what she agrees on. Maybe everything. So that's good. Do we need to save UST? No, there was something else that I saw that I wanted to ask. Let me see. All right, so Alex clearly just wants to save USTC. We should mint USTC. Minting more LUNC also damages LUNC holders. Just how defended USTC holders? That's more of a statement.
I don't think we want to hyperinflate USTC supply. I don't see how that's fair to anybody. And I don't want to. I'm 100% in LUNC myself. I have no.
So is he saying that Luna will not hit $1 no matter if his plan is implemented or not?
It's going to be a while. It's going to be quite a while. But at 1 penny, you're looking at 30 times return. So that I think is that happened. I think a lot. I think it got up to 200x or something in UST in the Luna UST trajectory, and I don't know. So $1 can take a lot longer.
Okay, but a penny's a more realistic goal, you think?
Yeah, baby giant steps.
Okay, all right. Alec, you spent a lot of time, and I really, really appreciate it. Covered all the questions, answered everything. Thanks, Trev, for putting him on the spot. I don't think I put him on the spot. I think these are questions that he's well aware are out in the community. What I've always appreciated about all these guys is they will come out and just answer the questions. They're not hiding, they're not dodging, they're not obfuscating. Like his plan or don't like his plan, Alex is trying to come up with something that's going to help us. And I think we need to show him respect. We need to hear him out. We need to ask the tough questions as well. Yeah. But we need to give it a shot and come at this with an open mind and open ears, because what's happening right now is not going to get us where we want to go. So let's say hypothetically, you won some hearts and minds here today, and at some point this comes up for proposal, and it goes through, and we're going to do phase one, okay? And then it falls on its face for whatever reason, right? What do we do? Do we issue another proposal and go back to plan A? What does that look
I mean,
like?
the community. I mean, then I've lost credibility, and the community would have this pile of BTC that it's sitting on, I guess, because nobody else wanted to use USTN or whatever whatever the failure is, and yeah, then it would just move on. I mean, I don't.
Yeah.
Just like anybody else does, when you try something, it doesn't work. It's the way we're going to do it. Like the risk of catastrophe is like extremely low. It'll be like a try it and try it and it'll work or it won't, and the community will just move on from there.
Yeah, I know it might sound, guys, like it's like let's just throw the spaghetti against the wall and see what sticks. But it's not that, because these guys are just top of the line in what they do. And so these proposals that come out, but listen, the fact of the matter is we have governance, okay? We're able to submit proposals. We're able to say, okay, this is 1.2% isn't working. It's killing the supply. So let's drop it to, we can vote on all that, right? We can vote.
Yeah, like there's no, this is like something that's really, to people who are really new to crypto, this is like a very radical idea. There's no CEO. There's no commandments handed down from on high. Like every single parameter of every single proposal will be, can be approved by governance, can be changed by a later vote. Like this is it's a democratic process, and there's no one person calling the shots. It's just like the community likes the idea, and it doesn't.
Yeah, it's up to us. We start with a construct that makes sense, and if we have to tweak along the way via proposal, then that's what we do. But the goal, never forget, don't make any mistake. The goal of everyone involved here is the success of LUNC, the success of everyone that's holding. So yeah, let's show it respect and really give it its due. All right, Alex, thank you very much for coming on. I really appreciate it. You're welcome anytime.
Thanks for having me.
Yeah, when you put out another Medium thing or whatever, let me know. Why am I hearing about it from
no, I just knew it was gonna be like I know you're kind of like 6 a.m. to 3 p.m. guy in your day job, right? So you're probably going to put it out today, but it doesn't really say. It just kind of says let's break up the prior proposal into two pieces. Like it doesn't like radically reconfigure anything. Okay. So
all right.
All
right, I'll let you slide on that
one.
All right. Thanks, Alex. Thanks, Alex. Everybody's saying thank you very much for being here. So everyone appreciated it. Great job, you. Great job, everyone in the chat. Thank you, everyone who came in. Thank you, everyone. It's telling me to play an ad. I don't think I played an ad through this whole thing, but I don't care about that. I wanted to get the information out. Okay. Yeah. Thanks for everybody in the chat. Thanks for you guys, super chats and the super stickers and all those things. I appreciate you all. I really do. And it's because of these guys wanting to come on and chat about this stuff that my whole community is growing. So I am indebted to you and to everyone else in your world who puts trust in me to come in and get your message out. So have yourself a great night, and I will talk to you soon, my friend.
Thanks a lot, man.
All
Talk
right,
soon.
guys.
Thanks, everybody.